What up, guys? It's October 25th, and we're going to do a education video today. This will be my second video on the YouTube channel. Appreciate anybody who's followed me or who's hit the subscribe button. If you haven't, give me a chance. Whatever I can do for you, I'm just here to teach, to entertain, to kind of make your day fun and give you something to watch before you go to sleep, hopefully. Okay, so let's move on. So before we get started too, I want to talk about Instagram. Of course, we're not doing videos on Instagram any longer because that whole IGTV thing has changed on Instagram. So we're going to leave that alone. We're going to go right here on YouTube. I want to post my videos there. But on Instagram, I will still post my moves, my portfolio moves, my buys, sells, and any kind of options plays that I'm doing on Instagram. And I'll also advertising here on a market alert video. Okay, so what are we talking about today? What are we teaching? So I want to teach you guys one thing for beginners, okay? If you're already an expert or you already know about the stock market, maybe this video is not for you. But for beginners, I want to talk about something that I hear about a lot of messages that I get on Instagram is the price of a stock and telling or being able to tell how cheap or expensive a company is based on the price of a stock. And the answer is you can't. The price of a stock doesn't tell you how cheap or expensive that stock is. Just because Amazon is $3,000, $3,500 a share doesn't mean it's more expensive than a Lam Research or a Taiwan Semiconductor. It doesn't mean a thing, okay? So that's the one thing that I want you guys to get from this video is that the face value of a stock is essentially meaningless. And let me go a little bit deeper into that. So here we're going to start with Starbucks Corporation. This is the Yahoo Finance page, and we can get a lot of valuation metrics. We're going to get, share counts and all kinds of things, growth rates from Yahoo Finance. And Yahoo Finance is essentially my best friend. My second best friend is FinViz, which is a good website to get more valuation metrics and kind of a little bit of a deeper understanding of a stock. But Yahoo Finance works just fine. So let's take a look at Starbucks at a price of $114 a share. So how do we know that $114 a share is expensive versus some other company out there? Okay, so what we're going to do is we're going to say, of course, the $114 a share doesn't matter. And that's essentially what I'm trying to teach you guys here today. It means nothing. What matters is the price of this stock at 114 versus the growth rate versus the price to earnings ratios versus the price to sales ratio. And where can you get that information? Here on Yahoo Finance. Very simple. We're going to go to the statistics tab on Yahoo Finance. And we see here, if we scroll down a little bit, we're going to see Starbucks and all these valuation measures. So let's go over this real quick. So to give you guys an example, in the Stock Gladiators Discord, and of course join, and I'll leave the link down below, I get people that ask me questions about, a certain stock at this price. What do you think of Palantir under 25? What do you think about this? Essentially, those people I don't take very seriously when they're talking about share price. I like investors, I like people that talk to me about market cap, trailing PE, the price to earnings ratio, and the forward PE. And also price to sales. Those are my favorite measurements to kind of gauge whether a stock is expensive or not. So these guys right here, price to sales, trailing P, 4P, and market cap. So let's go over those one by one. So market cap is the price of the actual company in the stock market. So currently Starbucks is worth $135 billion in the stock market. The trailing PE is the price to earnings ratio. So it's the current price of the stock based on its current earnings. And we can see here, Starbucks trades at 47, almost 48 times its current earnings. When it goes to forward PE, it trades at almost 31 times the future earnings. And this is a little bit tricky because a lot of people tend to not understand the concept of future earnings, and it's very simple. Okay, so there's a certain amount of analysts here on Yahoo Finance that are getting together that are estimating the amount of earnings for the next 12 months for Starbucks, and they're coming up with a number of 31 times the next estimated earnings of the next 12 months. And that's what that measurement is. Price to sales is the price versus the revenue, okay, and the revenue that they're bringing. So the amount of sales that the company is making every year. So here 5 times is very reasonable. Forward PE, I don't like anything over a 20. depending on the growth rate, of course, and a trailing PE. I don't like anything over 30, also depending on the growth rate. So all this is contingent on how much the company is going to grow, because that is what the market cares about essentially, is the growth rate of a company. The stock market is going to take companies that don't grow and throw them to the side. That's what's going to happen, okay? So for context, this is the price of Starbucks. At $114 a share, it trades at a forward PE of 31. But if I bring you Skyworks Solutions, this is another company here with the same page, we're going to see that at 165, Skyworks Solutions trades at a cheaper valuation than Starbucks at only about 14 times its forward earnings, 20 times its current earnings, and price to sales 5.81. So it's a little bit more expensive on a price to sales ratio, but on a PE metrics basis, it is almost twice as cheap as a Starbucks. Okay, now for further reference, to make this impact you guys more, here we have Lam Research Corporation, which we own for the account, at $551 a share. So you might say, oh my God, this is so expensive. $551 a share. Look at this, guys. 18 current PE, 19 current PE, and then a forward PE of 16. That is twice as cheap as Starbucks at $115 a share. Okay, so you guys can see how the price of a stock essentially is meaningless, because it only speaks to the share structure of a company. It doesn't speak to how expensive or cheap it is. So it's very important that we forget about this number, because 2 shares of Lam Research are essentially the same as, 9, 10 shares of Starbucks. What does it matter if you have $1,000 invested in Starbucks and it moves higher by 10% if you have, let's say, 10 shares, or if $1,000 of Lam Research with 2 shares moves up 10%? What is the difference? The difference is nothing, not a dollar, not a penny difference. You made exactly the same amount of money because they moved the same amount percentage. And then here for my last example, Texas Roadhouse is a stock that I've been looking at for a long time, and I really want to get in it because it is a great business and it's a growing business. But look at this, guys. It's a $6 billion company that is trading at a forward PE of 21 times forward earnings. It's almost a good deal. Almost, okay? 33 times trailing PE, the current PE ratio, and price to sales of 2. This is not a bad business here. I would argue that it is sort of in buyable territory, but the difference between most investors and myself is that I like a bargain stock. I'm looking for a good deal, and I'm looking to be a bargain hunter when I'm buying individual stocks. So Texas Roadhouse is one that I really like, but the valuation needs to be better. I'm thinking somewhere under 80 is definitely acceptable for Texas Roadhouse and its growth rate. But if the growth rate slows, then the stock needs to get cheaper for us to be interested in it, if that makes any sense. Okay, so that's what I wanted to go over today. Just give you guys a little bit of a glimpse of stock valuations. Of course, if you guys have any questions, reach out to me on Instagram, on the Stock Gladiators Discord. I'll leave links for those on the pinned comment below. Again, if you made it through the video, I really appreciate it. I hope you got something from this. I look forward to teaching you a lot more things. Feel free to reach out, comment. Peace out, guys.